We've got a question right over here.
We do have a question.
We're going to have a reversion to mean for residential housing prices, and it's going to happen in major markets. And I guess it's a question of when as opposed to if. What are your thoughts on what the impacts will be in the various parts of the world?
So just to be sure I got the question correct, the question is related to what's happening with residential housing prices, specifically here in Vancouver, in the Lower Mainland?
Yes, but more specifically to the impacts on the broader economy, because how people feel about their own value when their own housing prices are lower.
Thanks. So it's related to sort of the economy as well. So 2 days ago, I got a call from a friend of mine who we work with for real estate in the U.S., who had a friend of his who runs a hedge fund in Florida, and they wanted to speak to us about how they could short the Canadian housing market. Because they were pretty sure that what happened in the U.S. in 2005 and 2006 was going to happen to Canada. And I just went over it with them. I said, look, you may be 100% right, but I can't tell you how many people have ended up in tears trying to short this marketplace. And I think part of the challenge is that the Canadian metrics and the U.S. metrics, the two situations are quite different as it relates to debt, lending practices, equity in homes, and things like that. So I'm the first to agree that in theory, you should see a significant price drop in housing prices in both Toronto and Vancouver in particular. But I will also say that for the last 50 years in Vancouver, where they've been tracking house prices have gone up in real terms by about 7% a year. So part of that is everything from constrained geography to demographics to immigration to all of the other factors that go with it.
Interest rates?
Interest rates, of course, being low is a huge issue. So the question you have to ask yourself is this: what are the factors that are going to cause the supply-demand mix in housing to dramatically change? And I'm not saying they can't happen. I'm just saying it's hard to see where those factors are. And the other thing is, in Canada, we have two bubble markets. But basically, the rest of the country is relatively benign from a pricing perspective in terms of the level of house prices as well. Do you have any thoughts,
Yeah,
Rob?
I mean, I think it's interesting. We've had a housing bubble in Vancouver for I don't know how long. They have one in Toronto, and now it's a big deal, and it's on the National every night. So it's only a crisis when it hits Toronto. But one concern I would have, and I think that maybe this is what you're getting at with the question, is what really concerns us is the percentage of the Canadian economy that is now devoted to the housing industry, be it construction, financing, real estate, all of that. And if you look at historically where it's been and where the average has been, we are well above that, and we're well above where the U.S. was before their housing crisis. I agree with John. I don't know how to predict when and if you're going to have a correction, but I'm worried about the impact that's going to have as you revert back to the mean and likely dip below it. The two things that will help mitigate that is energy industry in Canada and the recovery of that should soften the blow, because I would maintain one of the reasons why Canada and the Canadian economy has been doing better is because it's benefited from the housing industry. The other is, and we spent a lot of time tonight talking about the U.S. and not a lot about Canada, because we feel that the U.S. really is the driver of the global economy right now. And if the U.S. economy continues to strengthen, that's good for the Canadian economy, and hopefully will mitigate some of the downturn you would have from a correcting Canadian real estate market.
Yeah, just a couple of other things. Historically, if you look at the graph of housing prices in Vancouver in particular, Vancouver as in Greater Vancouver, there have been two periods of time in the last 40-odd years when prices have dropped. And in both cases, they dropped by 15%. From peak to trough, it took 3 years for them to get that 15% drop, and another 3 years to get back. The first time it happened was the early 80s, roughly 82 to 88, and the second time it happened was after the handover in Hong Kong, 96, 97, through 2001. So first off, it is possible to see a housing correction, and it can be significant and it can be quite long. But it's not likely to be permanent. So if one is choosing a housing outcome on the basis of, let's say, a 20 or 30-year time horizon, it's probably not a good idea to try to figure out how to do market timing. And the other thing you need to think about, and this relates to detached housing in the city of Vancouver in particular, they're probably, because we have no more space, no more geography to build, no more land really to build. So I'm willing to bet, and I have not got formal statistics on this, but I'm pretty sure it's correct, that there has not been a net new single detached house built in Vancouver in 40 years. That houses come down and get rebuilt, and then some houses get torn down and turned into townhouses or condos. But the actual increase in detached homes is probably non-existent. So if a city is getting an increase in population, but there's no more supply of that kind of residence, then only one thing is going to happen. Over time, the price of that's going to go up. It has to.